right, YouTube. Here's my sneaky two video for you. I told you that I was gonna be right back. I was gonna post shortly. So this video I'm gonna get into companies that I'm looking at. I'm not completely sold and committed into to looking to actually buying these companies yet, but yeah, let's get into it. All right. So how do I look at it? All right. Like, how do I begin? All right. So I start with the sector. I tell myself, what sector do I not have exposure to for diversification in my portfolio? There is a lot of concentration risk in my portfolio. So, I have, as you know, I have a shoe company. I have a artificial intelligence, data analytics, technology company. Okay. I have an energy company. I got a bank in there. And so I need a healthcare company. A healthcare company would be nice, or just a different sector, all right? I think healthcare is a problem in the United States, and it's ripe for disruption, all right? So why not look at disrupting companies for healthcare, all right? So this video is probably not going to be as long as the other video. Just heads up, all right? So let's look at the valuation of Hims and Hers. This is a telehealth company, all right, and this is a 1.3 billion market cap, and they're out of San Francisco. All right. Now, let's look at their financials. Look at the revenue growth on this thing. Awesome. This is a high growth company. We'll look at the valuation. Look at how much cash they got. Look at this balance sheet. That's plenty of runway. Okay. Well, before I speak too soon, let's look at how much money they're losing before I say there's plenty of runway. Go to the cash flows. Here's their negative cash flows of how much they're burning, all right, yearly. If this number goes down in the right direction for less of a loss, they might have 4 or 5 years worth of runway if they don't ever raise capital again or raise any debt or anything. But I'm tracking that they are estimated to be profitable by, let me see here, 2025, in a couple years. So I think that's a good story proposition. Let's look at their profitability. The gross profit, that's where it all starts. Okay. I'm not interested in a lot of if you haven't noticed so far, I'm not interested in like companies that have low gross margins. All right. So all these other margins are really irrelevant. Those will all come in later as the company scales and becomes profitable. But the starting proposition is the gross profit margin. So if I get high number like 80% gross margin, there's plenty of room there to have some good juicy margins later on down the road. So that's how I look at that. That's how I start that. And I look at the total addressable market for Hims, which they sell generic drugs for erectile dysfunction and hair loss drugs as well. So, and they're going to get into weight loss and so forth. So I think that market, there is plenty of total addressable market for this to be a huge company. This thing can get to $50 billion if they disrupt healthcare. I could see it. All right, so that's good enough for me. Their growth, they're estimated double digits. I think if they get a path of disruption, they can start dwarfing these numbers and getting some really sick high revenue growth rates. Okay, so something to consider. I like the price to sales that they're trading at. Um, they're trading at less than 2 price to sales, and they're set to revenue. Let me see here. They're set to revenue a billion in just next year, and they're trading at 1.3 billion around right now. So it's the story, all right. Their management seems like they're getting their heads on straight. But like I said, more due diligence to come with the hymns. Um, but that's definitely one that I'm looking at. All right, second stock that I'm looking at, Fortinet. All right, this is a cyber defense company. All right. I know a lot of investors have probably heard of CrowdStrike, and I've looked into that as well. In fact, we'll go to peers, CrowdStrike, Zscaler. These are some competitors. But what I've done in my research and what I've noticed is Fortinet's financials, their valuation is looking better or more intriguing than CrowdStrike. If you look at growth, CrowdStrike has better growth numbers overall, but Fortinet's got something. There's nothing to sneeze at either. But what's the difference between these two, right? We go to the profitability. Look at the margin difference. Okay, so we talked about in my other video, if you got done watching it, we talked about the rule of 40. All right. This is an example. This would be an example of a tech company that's a SaaS business model that has the rule of 40. You got your EBITDA margin of 25.66% right here. And you have your forward revenue growth of 24%. Well over 40% totaling, okay? In fact, actually near 50%, actually. So that's an example of, yes, it can be done, you know? Now, I'll admit, Fortinet is at a different phase of their company's growth and their life cycle phase. So they're profitable and they're looking real good. So this is pretty much just a free cash flow machine. They're just gonna, they're at that stage where their valuation is just higher. Let's look at that actually. 3.3 billion in cash, 1 billion in debt. So net cash position, they're at 45 billion market cap. I wouldn't be this is going to be a little bit harder to quadruple, get a 4x or 3x or double or whatever. This is one of the proposition of this is probably going to be like you're going to get maybe your 15% gain a year. All right, you're not going to get your dramatic. You're doubled, right then and there. So it's more of a defensive play because my thesis on this is yes, I want to have some good exposure to this sector, because I think that as times get rougher in the United States, cybercrime will go up, and I don't want a company that, quite frankly, I don't want a retailer where everybody's robbing the place. In fact, I wanted the opposite. This is a defensive play of what I'm thinking about. Okay, so those are some things to consider. So a lot of the retail investors, a lot of them would rather go with CrowdStrike. After doing due diligence, I think Fortinet's the buy, at least for me. So, more to look, more to be said, more to look into, more research to be done. Zscalers may be an interesting one for me to look into as well. They have a smaller market cap, and my wife's job, she uses Zscalers, so I mean something to look more into. So here it is. Here's the two companies that I was looking into. I'm not completely sold on starting positions yet. Although I'm getting pretty close to considering with hims and hers more so. All right. So that's my take. Um, hey, comment down below if you know on stocks y'all are looking at, or what your thought process is when it comes to these stocks, or how my videos are doing, or if y'all want me to talk about one thing or another, or a company, or just whatever topic in general. All right. If you're getting value out of these videos, thank y'all. Consider liking and subscribing. Excuse me. Um, and I'll be out. I'll be out shortly with another video. Not this shortly, but all things considered, not as long as the past, duration of before these two videos that I posted. But I'll see y'all soon. I love y'all and have a good day.